Australian iron ore miners going bust. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at an article that's discussing, well, the significant decrease in iron ore prices affecting miners here in Australia. Now, Australia is one of the largest exporters of iron ore, and well, it's not surprising that it's having an impact. Now, before we have a look at this article, let's just jump here and have a look at the iron ore price. We can see it's sitting at $110 USD, so definitely down from the 220 heights and above that we had seen recently. Now, a big portion of this is driven by demand from China, everyone. And here's the question. Will this decline mean that a lot of projects and mines become no longer feasible and will start to shut down? And we're starting to see that. And will that have an impact on the Australian government and our economy here in Australia? Well, bloody oath, yeah, it definitely is going to. Here's an example from WA, guys. This is showing you how much of their revenue comes from iron ore. Just WA. Okay? Big chunk. It's going to have an impact. Federal government is planning for it to be 55 USD. Let's hope it doesn't hit that levels. So let's look at this article. So, fluctuating iron ore prices claim another 2 mines. So, while iron ore prices have risen slightly after last month dropping below 100 USD, 138 Australian, it's not been enough to save 2 more mines from suspending operations. After falling to $92 per tonne during the third week of September, the price for 62% iron ore has risen above US 110 per tonne to start October. This is still well below prices reached in mid-July this year, when they topped US 200 per tonne. Ridge's Iron Ore Mine in the East Kimberley region of Western Australia has been placed in care and maintenance this week, while Mount Gibson Iron has enacted a staged suspension of its Shine Iron Ore project in West Australia's Midwest. Indus Mining said the Ridge's Mine, operated by the company as part of a joint venture between Harbrook Mining and Ridge's Iron Ore, has been deemed economically unviable due to both the recent fall in iron ore prices along with continued high shipping costs. Now there's an interesting one. You know what? I will bring that up. Let me just jump here and So let's have a look at these shipping costs. And we can see here, this is from the Freightos Baltic Index. And sorry, I'm not going to sign up for your newsletter, but we can see here, currently it's 10,500, and this is just the overall index. So you can see how much it's grown from January 2020. Now, if we look at examples, specific examples, okay, I'll log in. From China, the East Coast, to the West Coast of the US, you can see that growth. And it peaked at 20,500, and it's been trending down. There you go, down to 17,970. So hopefully shipping is going down. We can see down 6%, down 3%. Here we go, China east to the west coast. China east to the East American coast, and that's down as well, 4%, but still over $20,000. So shipping costs, well, yeah, they are just crazy, everyone. Not surprising at all. So, Ridges was restarted in mid-2020 after previously being placed into care and maintenance twice in 5 years. Now, this is to do with these mines, even on particular mines, certain ore or the accessibility to certain ore is dependent on the cost of what they can sell the ore for. You know, what the rate is on a global level. That'll affect the viability, and they've got it figured out to such an extent how much it costs to mine from different parts of the mine and what's effective, what isn't effective. So, yeah, I mean, this doesn't mean that these mines are bust. It just means they're no longer affordable to run. But it's still an asset. In a statement, Mount Gibson said, given recent adverse movements in iron ore prices, product discounting and shipping freight rates, the company will implement a staged suspension of operations at the Shine mine site. Mount Gibson said it was scaling back Shine to reduce expenditure and preserve the value of the deposit, as well as to provide time to assess the outlook for the market. Mount Gibson commenced development on its Shine project in late 2020, before bringing the operation into production this year. It comes after similarly low prices claimed Venture Minerals in mid-September, forcing the company to suspend operations at its Riley mine in Tasmania. A week later, GWR Group was also forced to suspend operations at its C4 mine in Wiluna, Western Australia, as a result of prices. So let's have a look to see how this is affecting the markets. We'll look at some of the big iron ore players. We've got BHP, they're trading right now at 36.85. We can see down 0.76, so down 2%. But generally, market sentiment is, well, majority of people are buying. It's the most owned share on SelfWealth trading platform, which I always find interesting. BHP, a good popular one. But look at their 6-month performance. Yeah, it's been going down. And it's according to the valuation there from Finitiv, it's undervalued by 26%. I mean, do any of you use these markers to make to inform your investment decisions? And we've got, one of my favorite ones, Fortescue Metal Group. It's $14.57, and it's taken a big hammering. We have a look at the 6-month performance. There you go. It's been trending down, and most people are buying it. It's 23rd by ownership on this platform. And then finally, we'll look at Rio, $97.28, and it's gone down as well, nearly 2.9%, so $2.90. And let's look at its 6 months performance. People are selling, they're taking profits. People are buying good dividend paying stock, and this is over 3 months. So we can see there it's going down. So guys, what's the takeaway to all of this? Now, the issue or consideration here is, will these mining companies be feasible again in the future? And most certainly they will be, as the cost and demand for iron ore increases going forward. But how long is that going to be? How long will people wait? Do you take that into account when you make your investing decisions? How much of an impact is that going to have on the rest of the economy here in Australia? It's most certainly will, if you see a drastic and prolonged decrease in the mining industry, it's going to have a marked impact in Western Australia, and that's going to flow through to property. It's going to be interesting to see what happens. What do you think, everyone? Thank you all for watching. Please like, share, and subscribe to the channel. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content that I find and put together here, there are a few ways you can help out. You can join the channel on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Buy our merch from HeiseSays. Use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time. Bye for now.